Welcome to The Strategic Investor. Join us as we interview some of the world's most productive asset managers and uncover sophisticated and unique investment strategies in the markets. Here is your host, Charlie Wright.
Hello and welcome to Strategic Investor Radio on OC Talk Radio, where we bring you investment strategies you are not hearing elsewhere. We'd like to welcome today Will Rhind, founder and CEO of Granite Shares, a family of two exchange-traded funds, ETFs, one on commodities and one on high-yield investments. He speaks to us from their headquarters in New York City. Will, welcome to Strategic Investor Radio.
Thank you, Charlie. Good to be on.
So, Will, you started life in Aberdeen, Scotland. You've spent 16 years as a veteran of the ETF industry, which puts you really at the cradle of that industry 16 years ago. And then a few years ago, you started Granite Shares to create unique ETFs that others were not offering. And today we're going to talk about your HIPS, U.S. High Income ETF, focused on high income investments. So first of all, give us a brief background of yours, will you, Will?
Thanks, Charlie. Well, as you rightly said, I'm actually from Scotland, so a town called Aberdeen on the northeast coast of Scotland. So it's about 40 miles north of St. Andrews, for those of you that are golf fans. But Aberdeen is, well, the nickname is the Granite City, because it's literally made out of, or built with granite that was quarried within the actual confines of the city. So it looks kind of gray. It's all made of granite, and so the nickname is Granite City, and that's really where the name Granite Shares came from, as a kind of nod to the heritage of where I'm from.
Hey, that's good to hear. I thought granite was probably related to a solid foundation kind of thing, which of course it certainly could be also, but was unaware of the connection of Aberdeen and granite here. So the HIP strategy here. So you've taken an index of high-yield investments, and then you invest through that index with about 300 positions and are able to create a very diverse group of high-index investments that pay a very high-yield investments that pay very attractive yield today, which, of course, everybody knows is not available in every corner. So tell us what you did and how you've done it here.
Yeah, sure, Charlie. Well, I think the challenge is, first of all, how to get income in this environment and how to get meaningful income in this environment. And, at a high level, if you look at the traditional ways of doing that, you have stocks and you have bonds. And so if you go into the stock market and you get the S&P 500 or an index such as that, you probably at the moment have a yield of somewhere in the region of 2%. On that. And of course, you go into the bond market and you buy, a broad U.S. bond exposure, such as the Barclays aggregate, or even into the high yield space, you're looking at somewhere in the region of 3% for something like the Barclays Ag. And then for high yield bonds, the most risky in terms of the bonds, but the highest yielding, you're looking at somewhere around 5%. So those have been the traditional ways of doing it. And even at 5%, a lot of people would say, well, that's not that much yield, and you're taking on a lot of risk to get that with these high-yield bonds. And with interest rates going up and bond prices going down, maybe that's not such a great idea. And so what HIPS does actually does something a little bit different and takes a new class of security, something that you probably all heard a lot about in the course of the most recent tax reform bill, called pass-through securities. And pass-through securities are a class of security that literally distribute almost all of their income out to their shareholders. And pass-through securities typically are things like REITs, they're things like MLPs, master limited partnerships, things like business development companies or BDCs, or closed-end funds. So what HIPS does is actually put together a portfolio of these pass-through securities. Think of it as almost like an S&P 500 of the pass-through security world, and then packages that in an index. And that index, at the moment, yields somewhere just under 8%. And so the main benefit is not just the high yield, but it has a lower risk than some of the other sector-specific things. So once you start getting into the highest yielding ETFs in the market, typically, although you're getting yields in that sort of 7 to 9% range, you're taking a specific sector bet in most cases. You're betting on financial services companies, or you're betting on MLPs specifically, or preferred stocks. But what HIPS does is actually diversify across all these different asset classes or categories within the pass-through world, and are able to deliver that high income, which is a bit different from your traditional equities and bonds.
Right. Now, Will, what are the qualifying criteria for a fund to be put into your mutual fund, into your ETF here? Certain size, certain level of yield that they're offering through dividends. How do you qualify them?
So what we do is we track and manage a portfolio against an underlying index, and that underlying index has a rule book just like any other index in the market. And there's a liquidity screen, for example, for the different categories of pass-through securities. And typically that's an average daily trading volume greater than 500,000 in a particular category. So be it REITs or be it MLPs. There's typically a minimum market cap size. So typically that's $1 billion, which is obviously fairly sizable. And those kind of stipulations make sure that what the portfolio actually ends up doing is holding a basket of liquid, high-value securities that enable the fund and the strategy to deliver the kind of high yield that we can deliver.
It's interesting, Will. I'm quite familiar, really, with the four categories of investments you mentioned: the REITs, the BDCs, the MLPs, and the closed-end funds. I know, for example, that the average REIT pays a dividend, I believe, of 4%, and yet there are MLPs, partially because of the prices that have dropped, that many of them are paying 12, 14, 15, 16%. Do you do any cherry picking on this, or do you just do the index? Do you stay away from those that are so high because of the potential price volatility? How do you handle that?
Yeah, so as I said briefly before, what we do in our role as an index manager is really just to replicate and track the underlying benchmark. So the actual index itself contains those rules, some of which I was talking about, in terms of how the index is actually composed. Think of it like a recipe. And so the index tells you what's in the recipe, and it's our job to cook it. And so what we do is we don't take a view like an active fund manager would do in terms of what may be good or bad about a particular security. We try and or the index is really designed to do that, and so we follow that. So we just hold what's in the underlying index, and then at an aggregate level, the portfolio distributes what the aggregate of those individual securities distribute, which is where you get the high yield.
Okay. So, Will, high yield investing does not have, I don't need to tell you, does not have the best reputation in the world, not in terms of shenanigans, but in terms of the high volatility of the price of the underlying stock. What have you seen are the major misperceptions on the part of investors and advisors of the high yield marketplace? What do they not quite understand, in your opinion?
Well, I think that there are kind of two things. So I'll separate into two different parts. So when people think, or when people say high yield, what they almost immediately think of is high yielding corporate bonds. And that's a completely different asset class to what we're talking about, which is pass-through securities. So when people talk about high yield, typically they're talking about bonds, they're talking about risky bonds that have a high level of volatility and commensurately a reasonably high income. I think the biggest misconception is that, first of all, people don't really understand or know that this asset class, in terms of high HIPS or high income pass-through securities, actually exists. People automatically default to bonds or to stocks, but they don't think about alternative sources of income in the market. And therefore, something like this is typically a strategy that probably will go unnoticed by the majority of people because they won't be fishing in the right pond, and they'll be looking for traditional equity dividends, or they'll be looking for traditional bond investments, and they'll miss, something that could be quite attractive. Like anything, although HIPS, has this high yield we're talking about, there of course is volatility within the actual underlying index itself. So the strategy is definitely not immune from that, just like high yield bonds. The point of the alternative income is we think that it's a good complement to what people already own in terms of bonds or stocks, because it's a different type of security and the underlyings are different and react differently to different market environments.
I've got to hand it to you, Will. You're taking on a real challenge here. I notice that most every week when I read Barron's Magazine, and they typically have an interview there with a very high-level investment advisor, typically in the large urban areas, and they, are advising on hundreds of millions, if not billions of dollars. And the article will tell, and it'll show how that advisor is typically allocating the assets of their clients. And typically they'll show for fixed income, they'll show somewhere between 15 and 30%, sometimes a little bit more. And almost always it'll be a certain percentage in corporate bonds, certain percentage in government bonds, certain percentage in short-term bonds, municipals, etc. And I'm sitting there thinking, all of this looks good because they're not telling what kind of yield those kinds of bonds are paying, right. And the fact that when interest rates rise, all of those bonds are going to be very vulnerable to loss of principal value. So what are you doing to tell this story? Because obviously it is not being heard by these major high-profile investment advisors in the urban areas.
Well, it's even worse than that, Charlie, because if you actually look at the majority of the sort of websites where you can go and screen for fund data, you won't typically find a strategy or a fund like this if you're searching for yield. So the way that these typical yield screens are built into a lot of the major well-known fund websites that people go to get their research, to get their information on the funds, a lot of those websites, they don't really, again, understand what this alternative income, what these pass-through securities are, and therefore they don't have a category for it. And so what people will do is end up searching for equity dividends or searching for yield through bonds, and this won't even appear. So one of the major problems that we've got to deal with is just that awareness issue, and try and educate people on the category and bring attention and awareness to this particular part of the market, and then get data vendors, these kind of websites, to screen for yield properly to make sure that it's including all ETFs or all funds that have a particular yield, and therefore you could look, if you're able to screen by yield alone, which is actually more difficult to do than you might think, then you'd be able to see all the funds in the respective category, including this. But it's a challenge because just not many people know about it.
Yeah, it's very interesting. I know that BDCs, I first started looking at those seriously and investing in them just before the 2008 meltdown. Not great timing. And there were literally a half a dozen of them. That was it. And today I know there, the last I heard, there were well over 50. And I don't know, the last year or two, how many have been created. So I know that these have increased, maybe not always in popularity, but certainly in number here. And so
They are, and it's only going to get more popular after tax reform. So yes. What tax reform did was give tax benefit to pass-through securities. And tax reform was a big sort of benefit for these pass-through securities. A lot of people that own LLCs and things would get a break in terms of income tax. And what that's going to do, it's already happening, but what that's going to do is to bring more capital into the sector as people look to invest in these to take advantage of the tax benefits. But I think what we'll also start to see more of is companies actually restructuring into pass-throughs in able to, again, get these kind of tax benefits that have come about through tax reform. So I think you're going to see more capital in the space growing, and obviously more offerings, the BDCs and others such like that you're mentioning.
Yeah, very interesting. I hadn't thought of that, so we appreciate that input. So as far as you can tell, Will, what type of investor or advisor is investing in your fund? Are these institutions looking for higher yield? Are they retirees? Are they investment advisors to allocate the funds of their clients?
I think it's a bit of both, and certainly from what I can tell, and people that I've talked to, I've talked to a fixed income manager, for example, who's one of our clients, and what they use it for is a complement to the other traditional fixed income investments that they have to kind of juice up the yield a little bit, because the yields that they can get from the fixed income market are low by comparison to something like this. So they use it as a complement, something that is not fixed income, because again, HIPS is not fixed income, but allows them to juice the yield on their fixed income portfolio a little bit higher by using this. And then, of course, we get retirees, we get people who are really relying on this as part of probably other funds they would have in their portfolio for income. And people, one of the benefits of HIPS is you get a monthly check, which is distributed, like I said, every month. And to some people, that's very attractive. So they just want to be happy in their retirement and collect their check at the end of the month for whatever amount that the fund distributes. But I think for anybody who's looking for income, this is something that is worth taking a look at. And really, regardless of whether you're retired or whether you're an institutional manager, everybody's sort of in the same boat, which is we aren't able to achieve a high level of income from the traditional sources. And for some people, it's just not enough. And so you need to go to find alternative income sources such as HIPS in order to do something like that.
I was at a conference a few months ago in San Francisco, and more than once I heard a statement that actually goes back to a year ago, a conference that I was attending at UCLA. And the manager of the UCLA Endowment Fund was a speaker, and he was just an exceptionally impressive, bright man. I can't pronounce his name, Indian of some type, but just very impressive guy. And he said, we have real challenges today in the institutional space. He said, in order to meet our requirements, we have to generate 7 to 8% per year. He said the challenge is that years ago, we could have done that we did that fairly easily through fixed income bond type of investments. But he said today we can't get close to that with bonds. And so what we have to do is we have to go into these higher risk equity type investments, and we're not comfortable with that. But we really have no choice. And again, I've heard that echoed at conferences since, that these institutions are very uncomfortable with having to go into the equity marketplace places for that yield of 7 to 8%. So what you're saying is that, hey, we can create a 7 to 8% yield really fairly effortlessly by going into these 4 different categories here. And yes, the underlying price is going to ebb and flow, but that dividend is paid out, in your case, monthly, and we're able to achieve the goals that we have. Is that what you find among the institutions you're talking to?
Yeah, that's exactly right. So the HIPS fund now has just come up for its 3-year track record. It's paid the same distribution every month for 3 years. So it's been very, very consistent. Obviously, there's no guarantee of that going forward, but that's what's happened over the last 3 years. And so that's very attractive to people who are looking for income. And as you say, I mean, fund managers, whether it be institutional or financial advisors, a lot of clients need income, and there's just not enough income from a lot of these traditional sources. It kind of says something when you look around the world, and Europe in particular, I don't know the exact figure, but it's at last count, it was something like $3 or $4 trillion worth of government bonds that yielded less than gold. And of course, everyone knows that gold yield is zero.
Right.
Which means that all these other government bonds are yielding less than that. So negative yields. And the U.S. obviously now, we're raising rates, which is good, but it's not good news for bondholders because of that risk of principal.
Yeah, so that it would seem to us that you're in an excellent position here to tell a story that needs to be told here. So, Will, question we'd like to ask all of our guests: what keeps you awake at night?
I think, look, so I founded Granite Shares, a couple of years ago, and when you build a business, I mean, we're still in the early stages of life, as a company, and although we're growing quickly, what keeps me up at night is, making sure that we're doing everything that we can, to be successful. And, I manage a team of people. I want to make sure that we can provide, fulfilling, successful careers for them, and make sure that, they're fulfilling, their kind of hopes and dreams as well. And making sure that we're just doing everything we can to give the investor clients, the best kind of experience they can have. I think that's really it. It's really just the challenges of owning your own business and making sure that, your staff are happy, making sure that your clients are happy, and making sure that you're doing everything that you can in order to raise awareness and get the word out in terms of who you are and what you're doing.
I think, Will, that every business owner can certainly relate very positively to that, or negatively here. The second question we'd like to ask all of our guests: what book on investing would you recommend for our listeners?
Well, I'll be honest, Charlie, I don't really read many investment books. And the reason for that is because typically a lot of investment books I find, they don't really teach me anything that I kind of either don't know already, or I just find the principles a little bit old hat for the most part. So what I'd recommend is just books that I like. So I'm reading a book at the moment called Guns, Germs, and Steel by Jared Diamond.
Oh yeah, very familiar.
This is not a new book. This has been out.
Right.
This has been out for a while. But I'll tell you an interesting story. So I was on vacation just earlier this year. I was down in Mexico, and I was actually sitting on the beach and reading this book. And a buddy of mine from the city just so happened to be staying at the same hotel, and he came wandering over, and he said, "Oh, you see, you're reading this Guns, Germs, and Steel." He said, "Oh, that's a good book." He said, "I've shot guns with Jared Diamond," and I was saying, "Really? Like, how did that happen? Tell me about that." And he said, "Well, I was at a conference," and so he'd been to a conference and met Jared Diamond, and Jared Diamond was giving a speech, and then there was, I guess, some kind of extra activities, so they had ended up talking. I said, "Well, how did you meet him? How was he at this conference?" And he said, "Oh, he was invited by this gentleman, Steve Drobny." And I said, "Steve Drobny of Drobny Capital in LA?" He said, "Yes." And I said, "Well, Steve's one of my investors." And so it turns out that Jared Diamond's son actually is a investor through the Drobny VC in Granite Shares.
Oh, wow.
Which is kind of a amazing, small world story.
It is. It is.
But I'd absolutely no idea. And I was reading this book, and I talked to Josh, who's his son, probably once every 2 weeks. And there I was, just blissfully unaware of this connection. But it's a great book, and I'm interested a lot in the reason why I'm interested in books like this is because I like the sort of historical element to business. I'm much more interested in business books and things that kind of teach you about life. And what I like about this book is, I'm not finished it yet, but it talks to a lot of history that I certainly had no idea about. I was sort of blissfully unaware until I started reading this. But it sort of teaches you that investment lesson that at some level, nothing really is new, and that we've kind of seen this before, and it's just about trying to identify what period in history or what looked and felt like this in the past, and how did that sort of play out? And I think those sort of lessons are very interesting for, either personal investing or professional investing. And that's sort of why I'm into books like this. But I certainly recommend this one. It's very good so far.
Well, thank you. And, Will, that was a very thoughtful response. We've asked that question about 300 times, and that was as or more thoughtful than any of the others. And so thank you very much for contributing that. We appreciate it. So for those who would like to know more about HIPS, first of all, the ticker is HIP as in Peter, S as in Samuel. And so where can they go if they want to know more?
Yeah, and HIPS is the acronym for High Income Pass-Through Securities. So the easiest way to find us is at our website, which is www.graniteshares.com, just as it sounds. On the website, you can see our ETF page. It's really, really easy to navigate. And then if you go to the Contact Us section, you'll find all our contact details. And please feel free to reach out to us directly, of course, by phone or by email, whatever you feel most comfortable with. We're very, very approachable.
Okay. And then if somebody wants to hear a good Scottish accent, they know who to contact here. So
exactly. But people say my accent is more English, and I'd have to agree with that because I was living in London for 10 years, and before I moved to New York, and even through New York, when I go back home, people say I sound American, so I can't win either way. I'm either American for the British or English to the Americans or even Australian or South African. So you never know what you're going to get which day of the week it is.
It sounds good on this end, believe me. So final words for our listeners here.
So final words, I think that for anybody looking for income, certainly something like HIPS is worth some consideration. It is a challenging space in terms of how to generate income. I know a lot of people who invest in traditional fund strategies such as dividends and bonds, and maybe now with interest rates starting to tick up, now is a good time to reevaluate that and have a look and see if you can maybe earn a better yield by investing in something that are not bonds, and maybe look at this particular asset class, this particular part of the market called alternative income and pass-through securities, and see if it makes sense for you or your clients.
Will, thank you very much. Thoughtful words, and we really appreciate your being with us and offer our best wishes to you. It's a worthy goal and task to increase income to so many people who need it, the institutions, retirees, advisors, etc. So thank you again for joining us here today.
Thank you, Charlie. It's been an absolute pleasure. Thank you.
Again, we've been talking with Will Rhind, founder and CEO of Granite Shares out of New York City. You've been listening to Strategic Investor Radio on OC Talk Radio. We'd love to hear from you. You can contact us at info@strategicinvestorradio.com, and you can go to our website to hear podcasts of all of our interviews and shows, strategicinvestorradio.com. I'm Charlie Wright, wishing you an enjoyable week and productive investing.
Strategic Investor Radio is a production of OC Talk Radio and is provided for educational purposes only. Content of this program and the views of the guests should not be considered as recommendations by OC Talk Radio or investment advice from the host Charlie Wright or any other entity attached to this production. Investors should always consult qualified financial, investment, tax, or legal professionals prior to investing.